BMNR is down 17% in the past week. It's one of my top 5 positions. I've been making weekly recaps around BMNR and Ethereum for the past couple of months now, and this might be one of the craziest recaps I am about to record. I have over 100 tabs, with the wider thesis being that while retail sentiment is collapsing, we're seeing a massive disparity from institutions accumulating more so this week than any other week. And not only that, but we're also seeing a big disparity in terms of sentiment. And I'll explain that all in data. This is going to be a big video. You have been warned. Without further ado, let's jump right in. Okay, so there's one change with regards to this video. I've made about 16 BMNR videos so far in the past couple of months alone. They're by far my most popular videos that I've made. So thank you for that feedback, and I'll continue to be making BMNR videos. There is something different with this video, which is that it's going to be released to members of the channel first, and then to the wider public on Sundays. Sunday mornings. So thank you for those who are watching, who support the channel, and who enjoy and share these videos out. BMNR down 17% this week alone. If we look on the monthly view, it's down 34% in the monthly view, 42% in the past 3 months. You know, year to date still looks very, very good, of course, because we don't have a lot of historical data to play around with. But when you look at BMNR, the $35 range is really the floor essentially of where this has been trading, and it went as high as above $60 at the peak before oscillating in between that $30 range. Now, as we know, the value of BMNR is derived from the value of the underlying Ethereum that it holds, and also the premium of the market cap to the net asset value. I purchased more BMNR on Monday. I also even bought more on November 14th, which was Friday, yesterday. So all in all, I purchased about 400 shares of BMNR this week alone. I'll try my best to articulate in this video why. I have tabs here for different topics of what I want to talk about. We're going to start off first and foremost with regards to Ethereum adoption, and then we're going to move over to macro and sentiment before moving over to the other topics. So let's start off with adoption. We see here the Ethereum tokenized economy hit $200 billion with exchange balances at yearly lows, and traditional finance demand surging from institutions primarily. Some say Ethereum is undervalued versus its fundamentals. So here you can see the market cap by chain. This is token terminal that we're looking at, and we can see that this has been going up over time. We also see stablecoin supplies. This is something we've talked about more in depth over the past videos. Stablecoin supplies on Ethereum are up 65x since January 2020, while Ethereum fully diluted market cap is only up by 21.6x. So you can see the Ethereum stablecoin supply in yellow, and that's contrasted with the Ethereum fully diluted market cap, which is in blue. So you're seeing a discrepancy there. Top stablecoin supply changes, of course, Ethereum is sucking up the stablecoin demand. The biggest losers here are Solana, Arbitrum, and Plasma. And this is a more recent view, but if we look at the 12-month view, this is the last year, you can see that Ethereum by far leads the stablecoin supply in terms of the absolute value in USD, with $84.9 billion of value added over the past 12 months. We're now seeing massive amounts of stablecoins flowing into exchanges. This typically signals risk appetite. In short term, this is a bullish signal. This is just spiking right now in November. We're seeing, of course, a new all-time high in total transactions. This is November 12th. The Ethereum L1 and L2s combined processed 29.67 million transactions in a single day. And so essentially, if we zoom out, the Ethereum bull case is simple. This user highlights the only chain where every major crypto economy actually settles. You see the stablecoin supply going up and to the right, and you also see the application revenue going up and to the right. So Ethereum ecosystem is booming. We saw here Cash App with 57 million monthly users is integrating stablecoins with Ethereum. It's going to enable USDC payments in early 2026, powered by Ethereum. And on that note, we also see Morgan Stanley will offer direct Ethereum trading in the first half of 2026. This is Barron's reporting around Treasury Secretary Scott Bessent on November 12th, seeing the stablecoin market growing to $3 trillion. Bessent basically said we're going to see a 10x in growth for stablecoins, which will lift the demand for treasuries. And this is, of course, the Treasury Secretary of the US. So you're not only seeing adoption from institutions and developers, you're also seeing it from a regulatory perspective and from a government official perspective. Here we have Visa has launched a US pilot to allow businesses to send stablecoin payments straight from regular accounts. So obviously massive adoption here because you're seeing the biggest traditional finance institutions in the world also adopting stablecoins. And then we also have this post. This is JP Morgan adoption of Ethereum. They launched a deposit token, the JP Morgan coin, for institutional clients on Base, enabling instant 24/7 settlements. This was Bloomberg reporting. We are going to play a video just here in a second by Sam Altcoin because it sums it up very well. This is another major step towards on-chain banking with regards to Ethereum adoption from JP Morgan, another massive institution in the traditional finance space. Before we play this, I really wanted to just read off this comment here. Here's a boomer-friendly explanation how Ethereum actually works. So think of Ethereum layer 2s like your local bank branch and the layer 1 as a Federal Reserve vault. You drop off your cash at the branch, which is the layer 2. The teller bundles it with 1,000 others into an armored truck. An escrow guard rides along with proof nothing was stolen. Truck hits the Fed vault, which is the L1. Verified and final, you pick up instantly at any branch. The cost is pennies, the speed is seconds, and the security is Fort Knox. I thought this was a really great comment. It's actually a very nice analogy to draw the parallels of how this would work. And now let's go ahead and play this video. This was by Sam Altcoin. Again, great resource to follow. I've mentioned that in previous videos as well.
Next, JP Morgan is rolling out its deposit token JPMD on Coinbase's Ethereum Layer 2 blockchain. The company announced today that after successful test transactions from digital asset firm B2C2, Coinbase, and MasterCard, the bank's dollar-backed deposit token is available to institutional clients for 24/7 settlements. JPMD is not a stablecoin, but it does represent commercial bank deposits. Now, JP Morgan announced the token back in June, saying at the time that a deposit token created a close connection with the traditional banking system versus a stablecoin.
We can see that something that was announced by JP Morgan back in June is now getting rolled out. And you saw a couple of different names there. You saw MasterCard, you saw Coinbase, you saw others. We see here Coinbase's L2 network Base is breaking records as well. I just mentioned Base because the JP Morgan coin was enabled on Base. And this is really seeing a lot of records here. Daily transactions just hit 15.85 million. Base is in full growth mode with activity across DeFi and social apps driving the most recent growth. Of course, this is also going to spike up after you see adoption for this JPM coin. This is really going to go parabolic because JP Morgan is massive. Robinhood, of course, has said crypto is becoming the infrastructure for the global financial system. And one piece of news near and dear to my heart, SoFi launches SoFi Crypto and expanding Bitcoin and crypto services. And the reason why this is relevant is because you don't need an exchange account. You can just buy Solana, Ethereum, Bitcoin directly from your checking account on SoFi. It's actually the first regulated bank in the US to allow customers to buy cryptocurrency without having the need to go to a broker or open a brokerage account. And this is Solana themselves reposting Anthony Noto, the CEO, talking on CNBC around this launch. This happened on Tuesday when SoFi launched this. So that's going to be absolutely massive because now you have nationally chartered banks that are going to be offering crypto services as well. And yet, moving over to the next section around macro and sentiment, we are at extreme fear levels in the market. The market has been plunging over the past week. As I mentioned, the BMNR chart at the beginning of the week, Ethereum is also at lows. Bitcoin broke under 100,000 per coin. And we're seeing extreme fear. Extreme fear for Bitcoin, for crypto, for equities has always ended in a buying opportunity because buyers step in to buy the dip and drive these prices higher. This is a comparison of November 2022 for Bitcoin when it was at 16,000 in extreme fear. November 2025, it's at 95,000. And of course, we'll see where it goes. There will be volatility. It will be a roller coaster, but generally speaking, the adoption is going to front run the price action in moments like these. And we're seeing a lot of that. This is Tom Lee himself saying, to me, the weakness in crypto has all the signs of a market maker or two with a major hole in their balance sheet. Sharks circling the water to trigger a liquidation dumping of prices. Is this short-term pain? Yes. Does this change the Ethereum super cycle of Wall Street building on the blockchain? No. And he also says, PS, don't get liquidated during this time because there's some games going on behind the scenes, of course, around what market makers are doing. So Tom Lee here is explaining it with the same concept, right? There will be volatility. That is a guarantee. And there will be ups and there will be downs. And there's going to be a lot of corrections along the way. But the adoption is what you have to keep in mind. The adoption of the ecosystem is like the fundamentals of a company. Like Nebius, for example, is a company that I'm buying into this week. Nebius was at 110 on earnings and it dropped to $80 per share. this week alone. Massive drop, but I bought more and I actually made it my second largest position. Why? Because they also reported amazing fundamentals, great growth across the board. And I think that they're going to have a very bright future. It's the same thing with the Ethereum ecosystem and DeFi in general, right? Like I'm buying BMNR because I'm buying into that ecosystem growing. If the price of Ethereum is going to go up, down, or in circles, it really doesn't matter so long as the institutional adoption is there. And so I kind of chuckled at this. In May of 2021, Nvidia was at $14 and Ethereum was at 3,200. In November 2025, Nvidia is at 190 and Ethereum is at 3,200. Yeah, of course, it doesn't even compare. But throughout all this time, the adoption from an institutional perspective onto Ethereum was nowhere close to what it is today. We're seeing this parabolic growth and adoption. This is why I think this time it's a little bit different versus back in 2021, even though the Ethereum price is still the same. And if you also subscribe to that notion, then this would be a massive buying opportunity because you believe that the adoption is going to drive the next leg higher. Now, this is Tom Lee himself on CNBC closing bell. This is a 5-minute clip, so I definitely want to speed this up a little bit, but it's an important one. So let's see how much we get through.
Ether's down 8.5% this week. Bitcoin's down 8. BitMine is down 20. What's happening here?
Scott, I think we're still seeing the repercussions of that April 10th crypto deleveraging event. It was the biggest deleveraging event ever. And there are still, I think, some market makers that have some balance sheet issues that are trying to raise capital. So I think that this is leading to a market that is kind of raised. Every time we get a bit of a rally, there's some capital trying to be raised. And I think that's what's suppressing crypto for now. That's, of course, going to end soon. But I think that's led to why crypto has underperformed equities since October 10th.
Can crypto treasuries, like yours, for example, can they trade as well or in tandem with a cryptocurrency itself, or does one have to trade at the expense of the other? If I'm going to see money flow into Bitcoin or crypto treasuries, wouldn't it then come out of the actual pure play coin itself?
Not exactly, Scott. For instance, when BitMine has shareholders and institutional capital comes in, and JP Morgan, Invesco, BlackRock are buying big stakes, then that capital is then used to buy Ethereum. So it's actually going back into the ecosystem, but then it's going into a vehicle like BitMine that's actually a permanent holder. BitMine owns 3.5 million Ethereum, more than 2.9% of the supply, but now that is not going to be subject to liquidations because there's no leverage used to hold that Ethereum. And then at some point, that 3.6 million or 3.5 million Ethereum is going to be staked and then generate nearly $400 million in net income. Well, that can create returns for shareholders. So in a way...
So he's saying we own more than 2% of the supply, where it's not going to get liquidated. We're a permanent holder of that supply. We're not selling. And at some point, it's also going to get staked, meaning that it's going to generate yield for those investors in that ecosystem.
A crypto treasury is actually a pretty attractive equity because there's an income component, plus there's, of course, that ability to grow your Ethereum holdings per share.
But what if crypto treasuries become more favored than crypto itself? There's no negative impact for either the way that Ether or Bitcoin would trade if just more money floods towards the treasury part of this story?
Well, one, it's a conduit because, as you know, equity managers, many of them, the 4,000, can't own crypto directly. So they have to get exposure to Ethereum by buying a stock like BitMine. And BitMine is the 438th largest stock in America today. It's not.
And we're going to talk about this as well because there was a massive amount of inflow volume into BitMine specifically. We had 13F filings this week. So really interesting findings there. So what he mentioned there, where it's basically a lack of access, that a lot of these funds are using BitMine as a conduit or a proxy to Ethereum, is also really important with the bull case of BitMine specifically.
Not that different than if someone wanted to have exposure to energy, they can buy oil and trade a commodity, or they can take like oil barrels at home, or they can buy an oil-related stock, either a major or something in the supply chain. That's what crypto treasuries are, is essentially an asset class that gives you direct exposure to the crypto asset.
All right, let's pivot to the market itself. Is your confidence at all shaken in where we are and what you thought the prospects for an end-of-year run could be after what we've seen this week?
Well, it's never fun to see markets wobble and then stocks that are quite popular like AI and the quantums and nuclear come down so hard. But it is consistent with the idea that, we were up 6 months through October, so the market's overbought. We expected 2 weeks of consolidation, which is what we're getting. And then, of course, as you know, there's hawkish Fed talk, so there's a bit of a tantrum the market's having. But between now and year end, we still have really good seasonals. The earnings have been good. Sentiment has flipped negative, Scott, as you could tell. I mean, the AAI went to negative 17.5. So I'd say the risk reward is still really good for equities into year end. And yeah, I think the S&P will be over 7,000 by the end of the year. In fact, maybe over 7,000 by the end of the month.
No cut in December. Let's just say that that's now the base case. And AI remains volatile. The broadening trade looked pretty good at times this week, to where we were thinking of, okay, maybe we're going to get an everything rally. You think that's possible?
Yeah. I mean, I think one reason the Fed is backpedaling on a cut in December is not because they have more confidence that inflation is strengthening. In fact, many of them said they just don't know, but in general, they agree it's probably not. I think that there are signs that the labor market is maybe stabilizing. So you actually have a Fed waffling for the right reason, which is, look, if the employment market's holding up, the Fed doesn't have to cut. That's still a good environment for equities. I'm not trying to spin it, but it's not a bad reason if the Fed is starting to have second thoughts.
Okay.
Always.
So let's pause there. There is so much that Tom Lee said there. And honestly, every time I listen to this man speak, I get more bullish on whatever he's peddling because it makes so much sense. We saw the broader market sell off this week, and we saw these Kalshi odds, as well as the Fed Watch tool, both have it at a toss-up whether the Fed was going to cut by 25 basis points or keep rates where they were. The reason there is because of that dual mandate and the job losses that we see across the board. Tom Lee is basically saying, hey, it's a 2-week pullback. We still have seasonal tailwinds. We're still going to be fine. And he still has those same bullish estimates around the market holistically, and of course, around BMNR and Ethereum specifically. Let's go through some tweets really quickly. He responded to this user here who said, I'm 100% positive that Tom Lee regrets BMNR. There was no pressure to make sure a specific crypto performed. He was just chilling and talking about overall markets. He was a hero to some. Now he has pressure of making sure that one single crypto performs. If it doesn't, he gets backlash. Tom said, that's wrong. Ethereum is a super cycle. This is something he's been saying for quite a while now. He also agreed with this post. Ethereum is like a call option on the future of the internet. I really love this post. He said, bears are getting bold. Bold bears is a sign of selling pressure ending. This was on Friday that he said this, the same day that he went on that CNBC clip. He said equity and credit markets protesting the hawkish Fed cut. The December cut is up in the air, what I just mentioned. The 25 bips are keeping it stable. This is why the repo rates are surging as well as the VIX is surging. Markets are bullying the Fed towards a December cut. Be patient. This will resolve itself positively. Moving on, we had Trump earlier this week talking about the crypto sector in general. He mentioned the old financial system is over and a new crypto-based era is ahead of us.
Many Americans are unaware that behind the scenes, the technical backbone of the financial system is decades out of date, many, many years out of date. You know that Paul and others are straightening it out, but payments and money transfers are costly and take days or even weeks to clear. Under this bill, the entire ancient system will be eligible for a 21st century upgrade using the state-of-the-art crypto technology. Who would have thought we would have been saying that 2 years after?
I'm glad that he didn't finish that sentence for the sake of this video, but I'm glad that he is also recognizing what many people have been saying throughout the years, that the backbone of the financial architecture is outdated. As a result, it leads to delays and it's not modernized. And every single year, it's more and more prone to massive failures. And the government's working to resolve that. We see the US Treasury and IRS issue new guidance granting crypto ETPs a clear path to stake digital assets and share staking rewards. So, of course, this is something that affects BMNR specifically because they are a digital asset treasury company. And not only that, but it also highlights how to distribute rewards to retail investors. So as a BMNR holder myself, do I get a dividend when they get a staking reward, or how does that work? I believe they mentioned that rewards can now be paid off directly to retail investors. It turns Ethereum from a speculative asset into a yield-bearing income product that activates this demand from digital asset treasuries for staking specifically. So this, of course, is the Treasury Secretary, Scott Bessent. Let's hear what he has to say.
We will take a close look at regulatory impediments to blockchain, stablecoins, and new payment systems. And we will consider reforms to unleash the awesome power of the American capital markets. Americans deserve a financial services industry that works for all Americans, including and especially Main Street.
Including and especially Main Street is what he highlighted. Of course, we also had this. This is what the president was referring to. The U.S. Senate just submitted a bill to keep the SEC out of crypto. It changes the entire playing field. Here's some more details about the bill. So you have this digital commodities definition, which defines digital commodities and gives the CFTC primary authority over their trading, ending the years-long turf war with the SEC. And of course, this means that Bitcoin, Ethereum, and other major alts will finally have regulatory clarity. Developers get protection, protecting blockchain developers and infrastructure providers from being treated as money transmitters or brokers. They can now build without fear of being sued for running a node or deploying smart contracts. It has transparency around the CFTC to ensure fair markets and investor protection, building crypto one step closer to being recognized as a legitimate financial sector. It has global alignment, mandating the cooperation with foreign regulators, laying the foundation for globally consistent digital asset standards that institutions have been waiting for. Once this passes, the CFTC becomes crypto's primary regulator, giving clarity to spot markets, exchanges, and derivatives. It's a massive green light for institutional capital and altcoin ETFs waiting on the sidelines. Crypto has never been this close to full regulatory clarity in the US. And of course, you just heard from what President Trump was saying with regards to crypto specifically and the regulatory piece around the financial backbone of that ecosystem. There's so much happening from a regulatory perspective and from an institutional perspective around the accumulation and adoption of Ethereum. And we're going to talk about that in just a second. But one thing I want to highlight is we're still seeing supply shock. Ethereum exchange balances are at rock bottom levels. The supply on exchanges continues to drop. This is from Crypto Rover. We're seeing Ethereum is now more scarce on centralized exchanges than Bitcoin. So you can see the Ethereum here versus the Bitcoin in orange here on exchanges, and both have been plummeting as the price of Ethereum has gone up and even as it's pulled back. But only 10% of Ethereum's total supply remains on exchanges. This number is compared to 14% for Bitcoin total supply on exchanges. It's a massive structural shift showing how much Ethereum has moved into staking, DeFi, and long-term custody. Less Ethereum on exchanges means fewer coins ready to sell and more coins used on-chain or held in long-term wallets. I see that somebody has tagged me here. That's amazing to see. But essentially, we're seeing supply shock across the board here. Ethereum is more scarce than Bitcoin on exchanges. And you can go look at this live. This is CryptoQuant. It has all the metrics and charts that you can imagine for all the major coins. And you can see Ethereum on exchanges here. When you compare it to price, even as Ethereum has pulled back, the Ethereum on exchanges continues to fall. And I think this trend will continue because you just heard from Tom Lee on his CNBC interview. He said, we are a permanent holder of Ethereum. We now own over 2% of the supply. We're going to provide staking benefits and distribute them to shareholders, presumably, and they're going to continue accumulating Ethereum. Well, as you lock up more and more of that supply, this exchange reserves keeps going further and further down, causing more and more of a supply shock, which presumably will drive the price up. And the other thing that's going to drive the price up is an increase in demand. And let's talk about that right now. So on the accumulation point, former BlackRock exec said that Ethereum is the infrastructure for Wall Street. So this is a little bit misleading because that former BlackRock exec is also the CEO of SharpLink, which is an Ethereum digital asset treasury. So obviously he's going to be bullish on Ethereum. But you are seeing smart money, institutional investors, and companies, some of the biggest in traditional finance, stacking Ethereum and adopting Ethereum as a blockchain of choice. So you can see a whale here, 1.42 billion of ETH buying even more and more. And many wallets and institutions are absorbing this dip in Ethereum and also in Bitcoin. You can see all of this Fidelity. Of course, BitMine and other digital asset treasuries are buying up this dip. You're seeing the spot average order size here as the Ethereum dip continues to fall. The smart money is flowing into Ethereum. Massive Bitcoin selling and rotation into Ethereum as well. So you're seeing these Satoshi era whales selling billions in Bitcoin and buying billions in Ethereum. That's really interesting to see as well, because you don't see a lot from these old wallets that have been around for like a decade. But now you're seeing some activity that are rotating capital into Ethereum. A whale just bought $450 million worth of ETH. And here you can have the 30-day percentage change, the price, and the total balance of whale holdings and the monthly percent change. Whales are by and large buying this dip. You can see in white here, you have the price. And as the price continues to fall, you can see the 30-day percentage change is much higher. Now, this is for Bitcoin. There is also one for Ethereum that looks very similar to this as more and more people are flowing into Ethereum. And this, I think, is one of my favorite charts for the week. Of course, Sam Altcoin posted this. This shows the Ethereum balance by the holder value. And as you can see, while retail is panicking on the streets, the balance between 100 to 1,000 Ethereum holders is going down. The balance between 10,000 to 100,000 Ethereum holders is skyrocketing. Institutions are loading up. Retail is dumping, and retail is spreading FUD around Twitter. They're tagging Tom Lee around all of this BS. And market makers are profiting off of this. Institutions are profiting off of this. Wall Street is loading the boat while retail is dumping their shares. It's here in a chart. It's very, very clear to see. And it's a trend that I don't necessarily love, but At the end of the day, if you don't know what you hold and you don't know why you hold it, then you shouldn't be holding it. So I agree with that. Great chart here by Sam Altcoin. And this is something that you can also check out yourself at Crypto Quant. Sam Altcoin again says a Canadian firm just raised $100 million at 0% interest solely to buy and stake Ethereum, another digital asset treasury company. But remember, more and more of these digital asset treasury companies that you have, the result is more and more locked up Ethereum, which then leads to more and more supply shock, which then leads to an increase in price and the demand, and therefore the stock price of that digital asset treasury rising as well. Institutions are waking up. Ethereum is not just an asset, it is a yield machine. And this is best exemplified with SharpLink Gaming SBET, which is staking their Ethereum. They printed $104 million in net income in Q3, demonstrating the strong momentum and growth with regards to their staking, how they make their money, right? This is going to happen with BitMine as well. Tom Lee mentioned it in that CNBC interview. So when BitMine starts staking, then that's when you're going to see the yield being generated and either distributed to shareholders, or they just buy more Ethereum on the open market with their staking rewards and increase that Ethereum per share, which theoretically should increase the net asset value and therefore the stock price of BitMine as well. Let me very quickly talk a little bit about the ecosystem, and then I want to talk about BitMine specifically. So with regards to the ecosystem here, Ethereum is quietly pushing towards 60 million gas limit as node operators upgrade their clients for the new upgrade that's coming in December. Ethereum started the year at 30 million gas limit. We should aim for at least 3xing the gas limit to 180 million next year as a result of this new upgrade. And of course, for those of you that don't know, I talked about this in pretty much all the recaps over the past month. This Fusaka upgrade, which is happening on December the 3rd, is the next L1 upgrade officially scheduled for Ethereum. This is a mega thread on how this actually affects the Ethereum ecosystem in a very, very technical way. I won't be posting this update anywhere, but this is by Ethereum Intern. You can just go and follow him, and you can read this all yourself if you are actually interested in the technical components that go into this upgrade. But again, this is going to make it faster. It's going to make it more efficient. It's going to make it smoother. It's going to make it more scalable. And obviously, that's going to lead to more adoption overall. This post says Ethereum is trading just $35 billion above the entire ecosystem total value locked, the tightest compression since 2022. Historically, this setup has marked the bottom. I give it a high probability again, but the market can stay irrational much longer than anyone stays rational. So take it with a grain of salt. Network value equals productive capital. Markets assigning no upside to block space or trustware. Capitulation valuation in my view. This is by Leon who posts this. Here you have Joseph reposting Vitalik that says Ethereum is building the permissionless world computer. It does not chase fake TPS or sacrifice decentralization. It scales organically without compromising trust. It is unstoppable. Here, BMNR Bull says the L2s are exploding, and this is why it matters. Of course, scalability, as we know, cheaper transactions, faster transactions, more activity overall, with more flowing through the network. And obviously, that leads to ecosystem growth, which we talk about every single week. Leon, again, here talks, since the merge, Ethereum has added more than 4 million ETH to its supply. It is not deflationary, but it is still materially less inflationary than Bitcoin right now. The annualized supply growth is roughly 0.8% relative to Bitcoin's 1.4%. So you can see checkpoints here with regards to burn, merge, and you can see it relative to Bitcoin and Ethereum supply changes over time. This is on a multi-year view. Here you have a post saying, pay attention, Ethereum's validator count just slipped below 1 million for the first time since April. This is capital stepping back from consensus. Exit queues rising, staker unwind in motion, short-term pressure is real. What matters now is if this becomes a trend or not. And in this video, I want to provide the good, the bad, and the ugly with regards to everything that's happening in the ecosystem. So I don't want it to be an echo chamber with me just talking about the bullish stuff. Like, I want to talk about everything with regards to the ecosystem, as well as adoption and accumulation and sentiment as well. This is Leon again saying the share of Ethereum locked in smart contracts is declining, down from 46% earlier this year to around 42%, likely reflecting treasury firms and large holders pulling Ethereum out of DeFi and staking, waiting for clearer regulation or redeployment opportunities. If this trend continues, it could signal cooling on-chain activity. But once the clarity returns, these funds may flow back into the ecosystem. It's a metric to watch. This post here by Kira says, last week, Ethereum L2s burned $16 million worth of ETH. That's $0.8 billion annualized. All of this before the Fusaka upgrade on December 3rd. How much TPS will lighter Arbitrum base do after Fusaka? I am bullish on the upgrade for ETH, the asset. So that's going to be really highly anticipated. And we're going to see what the actual effects are once that does get implemented very, very shortly. Okay, now let's talk about BMNR specifically. So here we have a post saying BMNR is pleased to announce new management and board appointees. You have the new CEO and 3 independent board members here. And you can see the board members, the CEO of New Edge Wealth, the CIO of JPD Holdings, and Olivia Howe here, the chief legal officer of Rig Up. They have this whole blog post here, but they also have a thread around this new CEO, former head of Asia TMT Investment Banking at HSBC, guided many companies through digital and technology transformations. Quote, the transformation and innovation now facing Wall Street through blockchain and Ethereum mirror the explosion of opportunity that mobile phones and the internet unleashed on telecoms and technology in the 1990s. With its substantial Ethereum holdings and credibility with both Wall Street and in the ecosystem, BitMine is poised to become a leading financial institution. That's actually crazy when you see people referring to BitMine as like a leading financial institution, because to me, it signals that it's come such a long way from being just a digital asset treasury company to like an actual mover in the Ethereum space. And as Ethereum gets bigger, then obviously BitMine is going to benefit quite drastically from that. So this is the new CEO of BitMine. So here we can go to some key experience. This is a post by Roy. Over 10 years advising high growth companies like ByteDance, Alibaba, and others. Instrumental in development of 250 unicorns born in Asia over the past decade. Former roles at HSBC, Lehman Brothers, and deep expertise in tech and finance to advise leading companies and investors. Here's Tim Sweeney's thoughts on the new CEO and board members, saying with the price of ETH falling, it makes raising capital more difficult without diluting shareholders, and BMNR can't sell ETH to buy back the shares because it's directly contrary to the thesis. Completely agree. Especially selling under 3,500 doesn't make sense to be selling Ethereum when it's cheap when you're trying to accumulate Ethereum. So you can see why it's volatile. And they don't want to use the cash to buy back stock when the Ethereum price is so low, because that's not sustainable, because you then create a greater incentive to short or sell BMNR, assuming their Ethereum price stays low. The only answer for BMNR is to get more funds to buy Ethereum when it's this cheap and get others to do the same. So at some point, there are 2 steps they can take. Number 1 is borrow cash and buy ETH and repay that debt when you rapidly get to 5% and stake sooner. Number 2, find someone who has access to more capital so you can issue more shares at a higher price and give them more warrants after BMNR, like $80 or $100, so dilution doesn't matter until later. Where do you get that capital? Well, it may help to have venture capital connections and connections in Asia, which the new CEO has. The challenge is to identify and convince Ethereum whales to stop selling Ethereum. In my opinion, the volatility and uncertainty won't change until the drop stabilizes. That can happen if BMNR can go into this market aggressively and buy at this lower price. And you need to convince more institutions and possibly venture funds to invest in both ETH and BMNR. That's why the CEO was hired, in my opinion. Of course, Tim is a lawyer with many years of experience, so I kind of buy that thesis around getting more capital into that ecosystem. Of course, BMNR is going to reach their 5% accumulation goal much faster with Ethereum under 4,000 than with Ethereum over 4,000. This post was earlier this week. On Monday, Grant Cardone posted ETH plus Bitcoin plus real estate, posing here with Tom Lee. Tom Lee was also here. This post is in Korean, but translated, it says, had lunch with BitMine's Tom Lee and Jamie Dimon at Jamie's favorite spot. That's interesting. The CEO of JP Morgan, Jamie Dimon, is casually having lunch at his favorite spot with Tom Lee. So really interesting there. Of course, the institutional connections that Tom Lee has on Wall Street will convince a lot of accumulation and adoption into the Ethereum ecosystem. A lot of 13Fs dropped this week, and we saw Peter Thiel cut his BitMine position in half, likely taking a loss on that sale. And interestingly, based on the ETH chart, he trimmed the position right around the same levels Ethereum was trading at back in July. This is Sam that is reporting on this 13G filing. You had Goldman Sachs announcing $27 million investment in BitMine. You had Morgan Stanley disclosing a massive 9.69 million share position, approximating $503 million in BitMine. You had Jane Street disclosing a massive position, $168 million worth of shares, along with call options and put options. My guess here is they're just operating on behalf of their clients, so I wouldn't read too much into that. Of course, Cathie Wood bought more BitMine this week. You had BlackRock disclosing the 13F ownership of 3.4 million shares of BMNR. I think I talked about this one last week. Charles Schwab announced 1.7 million BMNR shares worth 88.9 million. Bit Capital buying 2 million shares worth 106 million. Geode Capital disclosing 2.04 million shares. VanEck disclosing 1.57 million shares. Nikkei Asset Management disclosing 3.78 million shares. Fidelity, the second largest holder. You're starting to get the trend. This is a summary list of all the institutions that are loading up on BMNR. ARK Invest, BlackRock, Vanguard, JP Morgan, Bit Capital, Charles Schwab, YieldMax Ultra ETF. Of course, you have the Peter Thiel news here as well. Pretty interesting stuff here. Retail has been crying about BMNR. All the big institutions have been loading up. 360 institutional owners, 338 are long, 2 are short. In the last week, all of the big heavy hitters announced that they were buying more BMNR. BMNR now holds over 3.5 million Ethereum as of November 9th, 192 Bitcoin, 398 million in cash reserves. They own 2.9% of the entire Ethereum supply. They continue stacking. They continue accumulating BMNR. And this is in spite of the price falling. BitMine is down $1.8 billion in profits, and yet they keep stacking Ethereum even heavier. I agree with Cole here. I mentioned it in this video. They're going to get to their 5 to 10% of Ethereum goal faster than previously expected if Ethereum stays cheap. If Ethereum is cheap, they can buy more at a faster clip and as a result reach that 5% accumulation target. And once they do, guess what's going to happen? They're going to start staking and everybody's going to get a yield. This user says it's no accident that BMNR can scale Ethereum accumulation faster than any other company in the space. It's because global institutions surrounding BMNR form a moat and a fortress of liquidity that allows Tom Lee to keep stacking Ethereum. This is what securing the future of finance on the internet looks like. And you can see all the big institutions there around Ethereum. Of course, I will finally talk very, very quickly about the technical analysis because I do it in every video. Ethereum looks to be in the final stage 4 of its ABC correction for wave 4. While people are panicking, it looks like we're in the final stages of this correction for Ethereum. Of course, this was one I found interesting. The record long pre-parabolic phase of Bitcoin to the business signal cycle is potentially finally nearing its end. And of course, what happens when the pre-parabolic phase ends? The parabolic phase begins. And I think you all know what that means. Ethereum technically still looks bullish and ready for a breakout. Yes, there was a pullback, but if we zoom out, we're currently testing the 50-day moving average after a 250% rally from earlier this year. It is a super cycle breakout on a 5-year consolidation phase. And of course, Stock Trader Max here thinks it's going to go higher. This is Bitcoin. The bottom could be getting very close because we've only hit this net unrealized profit level very few times over the past year, and we hit it again this week. The last time we hit it was, of course, April 2025. This is the Bitcoin gold power law. As you can see, Bitcoin is breaking beneath the historic bottoms here. This is something it's never broken beneath in its entire history. So if it does that, that's going to be really interesting because it's going to be massively oversold at that point, according to this graph. I think I've shown something like this in the past here. Ethereum just repeated history. In 2020, it went from $500 to $300, and here it went from 5,000 to 3,000. The same structure, the same panic. So there is some parallels here. You had this double top and then this bottoming out pattern and then a rally and this consolidation, which led to a leg higher. If that does in fact happen, that would mean that Ethereum goes much, much higher over December. We'll see if that does happen. Again, another pattern here. You can see this perfect bounce over this moving average. This is Bitcoin, the final shakeout phase from a wick-off pattern confirmed here, similar to that ABC chart I showed you earlier. Of course, you can see just charts where it's bouncing off of moving averages left, right, and center. Okay, let me wrap up there. This is my longest BMNR recap video that I think I've ever made. I hope you guys enjoyed it. My computer has been lagging because of so many tabs, but there's just so much news that I want to share with you guys. Again, I think the thesis here is that as retail is panicking, institutions are accumulating and they're adopting the ecosystem. The adoption continues and it's only going to get better. The ecosystem itself is going to improve, and we're seeing many institutions buying BMNR, which proves out Tom Lee's thesis that they're buying BMNR because in many ways they can't really buy straight up Ethereum. And as a result of this regulation, which basically highlights clarity around staking being distributed to shareholders, BMNR is going to become a massive yield vehicle as opposed to just a company that holds Ethereum. Very exciting times ahead. It sucks that the stock price is at $35 and Ethereum is, in the gutter essentially. But I want you to look at the forest and not the trees in front of you. And I think that all of these things that I'm sharing with you tell a very clear story. And it's also the reason why I continue accumulating BMNR. And I've done so in spite of my position being down and it continuing to fall even further, because I have conviction that this adoption is actually going to be the thesis that plays out. And this is just short-term noise in the price action, the volatility. I don't want to get shaken out of my position. So take that with a grain of salt. I'm just a guy on the internet. I am not a financial advisor. This is not financial advice. Hope you enjoyed this video. If you did, please share this out with somebody you think might also enjoy it. Get the word out. I really want to keep making these recaps. And thank you for being a member if you're watching this early. And thank you for supporting the channel, regardless of being a member or not. And I will see you in the next video next week around the full recap of BMNR and Ethereum. Thanks so much.